This is episode 10 of Trading Bot Sessions, where we talk with traders who have built automated trading strategies and trade everything from stocks and options to futures and crypto. In this session, I speak with Justin Dehorty, a software engineer with a background in computational chemistry and biophysics. Most recently, Justin wrote an open source machine learning indicator that was chosen as an editor's pick on TradingView. The indicator seamlessly merges key concepts from Lorentzian space, a component of general relativity, with a nearest neighbor's algorithm to predict future prices in markets. We cover Justin's work in PineScript, as well as the application of machine learning and technical analysis, how kernel regressions are an overlooked and powerful alternative to moving averages, and the limitations and future of PineScript. This is Mike Christensen, co-founder of Traders Post, and I trust you'll enjoy this episode of Trading Bot Sessions with Justin Dehorty. Justin, thanks very much for joining me on the show here. I would love to kind of get started and chat with you a little bit about your background, your education, and your career. I think we have a lot to cover on the indicator that you recently created for TradingView, but if you could just start us on a little bit more about you.
Yeah, absolutely. And, thanks for having me. I've taken a look at some of the stuff that you guys have done, and you've had some pretty cool people on here. So it's an honor just to be here talking to you. So I appreciate it.
Yeah, I appreciate you saying that.
Yeah. So I guess from my background, originally I come from the biophysics / computational chemistry side of things. Back in grad school, I was doing a technique called cryo-electron microscopy. And basically the goal of it is to show you what the structures of molecules look like that are embedded in your cell membrane. And it's really useful from the perspective of, like the pharmaceutical industry needing to know what the shape is of the receptors they're trying to target. And it's cool because it actually involved a lot of similar techniques that you might actually use in a financial markets context. So a lot of digital signal processing, because you have massive amounts of data coming in, and that definitely requires filtering and processing, Fourier transforms. And ultimately you're trying to just take a bunch of noise and generate a 3D molecular structure. So it was pretty cool. It involved a lot of lab work as well, which I wasn't necessarily as keen on, but I really loved the computational side of it. So I guess after grad school, I fast forwarding a little bit, I was in government for a while, and I was lucky enough that they paid for a lot of the courses I took in machine learning. Because back when I was in grad school, it really wasn't that big yet. It was still kind of, emerging, and people were still trying to figure out what exactly it can be used for. And really, thanks to our friends in the video game industry, it started to become pretty big right as I was kind of leaving academia. But it's really cool because, it's so applicable to a lot of different areas. Nowadays I've transitioned over to the private sector for an infrastructure company, and pretty much all of the work that I do is related to time series in one way or another, and machine learning in the context of time series. So I don't know if you know about Internet of Things, but basically it's like, you can imagine like a nuclear reactor, and there's like a device in there that's like streaming you data, right? Like similar to how you might get a stream of prices, like opening, closing prices. And it's very important to be able to make sense of that data stream, like knowing when an anomaly is happening. And that's where machine learning is invaluable. Other similar types of problems that I tend to work on involve web applications that generate massive amounts of log data, and being able to make sense of that log data in a way that's actionable, and you can improve the user experience and the product itself. So I guess it was like a couple years ago now, it kind of dawned on me that a lot of these techniques that I was working with are honestly really applicable to financial markets as well. And growing up, my mom was actually a CPA, and she's like a huge investor. She's very successful, but it was never really my thing. So it was something that's always kind of fascinated me. But I was finally able to kind of approach it from, I guess, my own unique perspectives. So that's when I started just really looking at financial markets and looking at, I guess, the overlap between what I'm doing in other time series oriented contexts and the type of analysis that's possible over in, the financial markets. So it was really interesting. I mean, there's definitely some big names out there like John Ehlers who have done incredible work with like digital signal processing, and transferring basically knowledge that's well known in engineering domains over to, the finance domain. And stuff like that is just really appealing to me. I feel like with some of the experience that I have, I try to bring as much as that over. And machine learning in general is just evolving like you wouldn't believe. Like I feel like most of my job is just reading papers and trying to keep on top of things. So the Lorentzian classification algorithm you're referring to is actually just only in recent years people have started realizing like, whoa, this is pretty useful for time series. And I think like the reason, I mean, Lorentzian geometry in general is incredibly useful for the general theory of relativity. And the reason is it helps describe the curvature of space-time. And when you're thinking about markets, one way to think of them is kind of like this space where you have a lot of different features that you could potentially be tracking, and they're all changing with respect to time. So a lot of these same principles are kind of applicable from like physics over to the finance domain, which is really neat. And as far as, I guess, machine learning algorithms go, it's not the fanciest. It's pretty limited what you can do in PineScript. It was a little bit of a learning curve for me because they take a pretty unique approach, and that it's very like time series oriented. And, pretty much everything you're doing is in a loop. So that was kind of interesting. So it's sometimes not so easy to port to other frameworks, but whenever possible, I try to work with Python. I'm way more comfortable with it. The libraries there are wonderful.
Sure.
So when I'm trying to determine what feature series could be interesting, for example, I usually just try to set up a correlation matrix and go off of intuition for the most part of like what I suspect would be good. And ultimately, that's kind of what makes it back into PineScript land. So really, the entirety of the algorithm is implemented in PineScript. Nearest neighbors is pretty intuitive. I'd say it's not like these deep learning algorithms and transformers coming out these days, but it's still powerful. Basically, it's the kind of thing that you tend to almost do by accident, like when you're just looking at like what happened when the RSI was 70, like all these times passed, right?
Yep.
I mean, that's basically you're looking at the neighbors. So it's really cool just because it's so natural for us to think of it, and it's computationally efficient enough that you can do it in PineScript. So that's kind of like drove me down, I guess, that route of trying to implement an algorithm that was possible, because TradingView is awesome in that you can just make your work available to so many people in such a convenient way. They don't have to download any other additional software. It's just all in the browser. So that's kind of why I was really excited to get into it, and a little bit about my background.
I appreciate you saying all that. There's a few things to unpack. I find it fascinating that your mom is a CPA and a successful investor. Is there anything you felt like you picked up from her along the way, or have you sort of ventured in your own path and using more of a machine learning approach to approaching the markets?
Yeah, it's interesting because I feel like I can talk to her now on a level that I couldn't before. Definitely, like I had to get up to date in a lot of the jargon and reading about it. But my dad is actually also a software engineer, like back to the very early days when it was like still emerging as a field. And so I guess in a way I'm kind of a blend of both of them, because he doesn't know he's kind of like me. He doesn't really know anything about that, investment world. And growing up, she handled all the finances, so she kind of had total control over that area. But now it's pretty neat, because I feel like the perspective that I bring is so much different than hers. She's, I guess, kind of, in my mind, almost similar to Warren Buffett in that she focuses on the fundamentals so much, and it's worked for her.
Sure.
But I really kind of prefer the algorithmic approach, and just like kind of like a different school of thought, just like from the data science based approach, which is also valid, and the reality is probably the ideal thing is the happy medium somewhere in between, having both of those points of view. But yeah, it's definitely been fun from that perspective as well, getting to be able to talk with her now and like in a whole new way.
Sure. And I guess on the subject of fundamentals, perhaps there's a path for you to explore there, as there are a handful of funds that use fundamentals from a machine learning perspective that
Definitely.
evaluate, maybe how to predict earnings into the future or predict other risk metrics associated with individual companies around their balance sheet. Has that been an area you've explored?
I'm just starting to, actually, because what you're saying is definitely, I believe it has a lot of potential. I mean, just from like a natural language processing point of view, I mean, the amount of releases in text format and videos out there, like even of like Chairman Powell speaking, you could transcribe that like easily now using so many different libraries, and making sense of that data is quite fascinating, and correlating it to what happens in the markets when these types of events happen.
Right.
So it's very much, that's very interesting for me, and I have a couple of projects that I'm working on that kind of involve just that.
Are you digging into large language models at all?
That's an interesting question. Yeah, I'm actually so basically I wouldn't call it a language model, but it is a transformer, which is the fundamental technology implementation underneath the hood of how like ChatGPT works. Is how most people are familiar with it now. But transformers in general, I mean, the original paper that came out on them was only in 2017, so it's very recent.
Very new stuff. Yeah.
Yeah, like even unlike deep learning, which they kind of knew about even in the 60s, they just didn't have the means to kind of implement it. It's really an alternative to recurrent neural networks. And it's really fascinating to me because it's like a totally different approach in that you're looking at the scope of the problem holistically. It's pre-trained. So it's kind of like having a friend who solved a puzzle already that you're currently trying to work on. And it's kind of giving you advice about the big picture of the puzzle, right? So it's just a totally different approach that's very fascinating. And remarkably, there really just hasn't been a whole lot of specific research in the context of like using it for time series, like forecasting. I mean, there's been a little bit, there's a few pivotal papers out there that look really interesting. And I've been trying to do my own implementation of it, not so much from like the languagey side of things, but, kind of cutting that part out and just like looking at, price action, other features, and, forecasting that into the future, what that would look like. And just because that's really all it does with words too. Like it's just predicting what words make sense to come next, right?
Yeah.
So it makes sense that you could do the same thing with, prices. They're kind of like a language of its own. So
interesting that you've applied it to the idea of applying it to prices. My thought process was to the more obvious idea of just interpreting sentiment, evaluating the meaning behind 10Qs, 10Ks, maybe even digging into interviews with executives, and maybe trying to extrapolate that, or not extrapolate, but rather correlate that to the historical price series a long time and see if there's any meaning to not only the interviews that come through, but on anything that's been recently said about a company. How can we glean meaning from that could be turned into a trade?
Yeah, I mean, definitely. It's an incredibly rich grounds for exploration, I'd say.
Yeah.
Yeah, natural language processing in general has always been a soft spot for me too. Unfortunately, you can't really do a whole lot of it in Pine scripts, so it would be kind of hard to implement it. But I'm actually in this like invite-only group with a lot of other incredible devs on the platform, and some of the co-founders of TradingView and the Pine script devs themselves. And
oh, cool.
Yeah, it's been really cool. I love how they just like reach out to people in the community who have so much interest in this, and they really do listen. And I guess I won't go into specifics, but their roadmap is really cool for the future. And I feel like with a lot of these features that are coming up in future versions of PineScript, it will hopefully make a lot of this NLP stuff and other things we're talking about possible.
Yeah.
But until then, you kind of have to just do some hacky things to get like nearest neighbor algorithms and some of these other types of ML to work, but it's still fun.
Well, that's interesting for you to say. And I know we're kind of off topic a little bit from PineScript and TradingView and talking about large language models and recurrent neural networks. However, it's interesting to hear that there might be some promise of that in TradingView in the future. I want to dig into the limitations of PineScript in a moment here, but to kind of circle back to where we started here, I discovered you on YouTube, your video on your indicator, which was named Lorentzian classification, and I'll link to that in the show notes here. It stood out to me because, one, you had this very interesting synopsis on what the algorithm was meant to do. And then it was very clear that you had this education and background in observing Lorentzian classification on these time series datas. And you had visualized it in a tool that you had running on your local machine. It's not something that you can visualize in TradingView, but you had stood up something to show this example of the warping of space-time in big events like FOMC events. So what I'd like to do is really just kind of cover the general concept of what you designed this indicator for. And more to the point, what specifically using classifications is it attempting to target? What's the target variable that it's using in order to predict a good signal for a trade?
Yeah. I actually have it running here. I spun it up just in case you wanted to see it. Is that something?
Sure. Yeah, why not? Let's do it.
Yeah, let me just share my screen really quick. One second. Okay, awesome. So basically, if you think about like the total amount of historical points in the past, it will look something like this, right? If you graph it with respect to certain feature series, and here I just kind of arbitrarily define 3 series, and they happen to be pretty good from the exploration that I've done.
And for those that haven't seen this, this is a CCI, which is a commodity channel index, and the wave trend, which is another indicator, along with the relative strength index. And you're looking at the relationship between these 3.
Exactly. Okay. Yeah. And this is after everything's been normalized. So it's all very nice from the perspective of they're falling within similar ranges, and you can directly compare them with each other.
Sure.
And you can see, like when you look at like the total history for something, it will look like a cloud like this. And the idea is that the center of this cloud is the present day. So you're looking at how similar everything is in relation to that. And there's a lot of different ways to do this. I mean, I really did a deep dive into the literature to look at different distance algorithms. And it's fascinating because there's like hundreds of thousands of them that,
really?
And, I mean, yeah, like humanity's been busy in the past couple hundred years in particular. I mean, really going back to the ancient Greeks, like Euclidean distance is like by far still the most used.
That was the one I was familiar with, but I had not heard of Lorentzian before your video.
Yeah. There's like, especially nowadays with like bioinformatics, like there's concepts of distance that you wouldn't even think about. Like how similar something is just by editing the amount of genes, like, and could you get to a new gene? So really it kind of helps to think of it almost as similarity more so than distance.
Right.
If that kind of makes sense.
Yeah.
So basically, let me clean this up a bit. So if I take away all this and we're focusing just on which points are closest to our present day, you'll end up with a distribution that looks something like this. And the idea is the red means it's a lot closer, and the farther out you go, it becomes farther. And this is the most intuitive for us. I mean, we pretty much live at the bottom of a gravity well. Like Earth's gravity just, is so much huger than everything immediately around us. And we can get away with just thinking about our world in a way that's like this. And for the most part, it's perfectly fine even in algorithms. It's a really solid distance metric. But where it starts to break down is when you have these major events happening, because all of a sudden what you'll tend to see, and I'll just kind of enable my gravity grid here, what you'll tend to see is, points out here suddenly start becoming more relevant. And if you think about like why this is happening, so you see how it's buckling inwards. So this is actually like, this could be a major event like an FOMC date or whatever. Points that used to be way out here are actually a lot closer to your origin now. And it's a very interesting phenomenon that resembles this like almost identically. Like you've probably seen these illustrations where there's like the Earth lying on a mesh. But like this one, that's actually wrong. They invert it so it's easier for you to visualize. But the real visualization is like this. Everything kind of like buckles inwards towards your center of gravity.
Yeah, because it wouldn't be just a normal horizontal plane occurring at one point, like the ring around Saturn, but rather it's occurring in all directions, right?
Exactly. So that's like pretty much why the theory of relativity, you're able to fully describe it, is thanks to this type of unique geometry that involves like buckling inwards. So if you go back to this over here, you can see that all of a sudden your Euclidean model, which was great before things started warping, suddenly is not necessarily good anymore. And intuitively, that kind of makes sense. Like the day before an FOMC meeting is technically pretty close, but it's the behavior that happens afterwards is so much different, right? So it's actually useful to like look at the last time Powell spoke and to see what happened, and that's something that's kind of missed in a very simple algorithm like nearest neighbors. So one way it's kind of like a hack around that is to just change your distance metric. So if you define it instead in terms of Lorentzian distance, you get this really interesting, almost like if you've done playing jacks before, it almost looks like a playing jack.
Yeah.
And it's just really fascinating to me because if you look out here, you can actually see like along this axis, there's some red dots way out here. And that means they're actually a lot closer than some of these purple dots near the center. So that's kind of like the key realization. And if I were to like just cut back on the amount of stuff being shown here, you can kind of see how like this is a case where the Euclidean distance, I mean, it looks very intuitive for us, but if you switch to Lorentzian distance, all of a sudden the nearest point out of all these is like way up here. So it's kind of showing you how RSI can be different as long as your other features compensate in a certain fashion or another. So it's a really powerful kind of realization. And ultimately, what I found is similar to all of these researchers in other fields, that it's really good for time series because you encounter this problem a lot, where everything is not just this perfectly Euclidean way of going about things. It's really a bit more complex. There's always warping it to some degree or another. So it's good at kind of giving you a more, I guess, diverse pool of points to compare to.
Right.
Because that's really the goal. I mean, they call it nearest neighbors algorithm, but honestly, nearest neighbors aren't very helpful in time series. You want like similar enough neighbors is more like what you're trying to go for. And that's where Lorentzian distance really shines, because it can kind of like reach back in time more so than Euclidean distance can, because it's a little bit more flexible along each of your feature series.
And so that should identify more accurate neighbors in your classification, correct?
In theory, or at least get a voting, because remember, all of these guys are giving you a vote, right?
Right.
So it at least gets you like a vote count that's a bit different than what the Euclidean vote count would be. So you have a different, like, I guess if you think of them as people, like you have different types of personalities giving you I guess feedback as to like where the price is going to go,
right,
like up or down, right? So it's interesting because if you assign a color gradient to that, you can actually see like the sentiment sort of changing. Sentiment in the sense that it's just the votes that the neighbors of the past are giving you. But you can think of it as almost like a really interesting gradient in terms of the sentiment changing. And it looks way cooler than in Euclidean space because of that diversity of neighbors that you're dealing with.
And this voting context is something that you're plotting on the TradingView indicator, right? Is that the number we see above and below each bar?
Yep. So I actually have it over here, and let me enable the numbers so you can see it.
Sure.
Sometimes it gets in the way of price action, but this is a beta that I'm working on. Members of my Patreon have been helping me test it out. But basically, it's the same thing as the one that I published, just with a couple of extra features. But you can see these numbers here are basically the sentiment scores that I was talking about. But they're really just the votes from all the previous neighbors. So basically, out of 8 neighbors, it will go through each one. If they think the price will go up, they vote 1. If they think the price will go down, they vote -1. And when you sum that up, you get a score ranging from, like, in the case of 8 neighbors, -8 to 8. You pretty much never get someone voting a 0, because that means like over the trading process, the price would have had been to the exact cent, like the same. So it's usually like, up or down. And that's probably one way I could even improve that in terms of like the weighting, because right now, if it goes up by a cent after 4 bars, they'll just vote up, right? But in reality, that's kind of like more of a flat line. If it shoots up multiple dollars, I mean, that's a different story. So I think maybe some sort of weighting mechanism for how far the price actually moved, that could be pretty useful.
Maybe something in momentum, rate of change, something to that effect.
Yeah, exactly. And that's actually a really good point. Like, even just by changing up the features that you're using, by default, I really didn't have a whole lot in here. Like, I just have RSI, wave trend, CCI, ADX, pretty basic stuff. And RSI, I actually have that twice, just because I found it's really interesting to kind of visualize it from multiple time frames. So that's kind of one example of how, using a machine learning technique, you can do things that are really hard to do if you're just trying to do it manually, like consulting multiple features at once at different time frames. You can sort of simulate that by just taking different lengths. So it's not quite a different time frame, but it's almost like that. So it gives you kind of a more well-rounded perspective. A lot of people think that this win rate up here is like the end-all be-all, but honestly, not really. I mean, my intention was not for this to even be a backtesting mechanism. It was really just for like power users who want to go into the actual indicator and just play around with the different settings and just kind of have like a semi real time, feedback as to like what it generally does over the course of like training a new model and how that performs.
Sure.
It's not a substitute for backtesting. A lot of people think it is, but it's not.
Well, for it to be a fully fledged system, and I think even our community knows this, win rate is only one part of the equation we look for. Positive expectancy means we also look for the risk reward relationship of each trade. Yeah.
Yeah, it's such a bad thing to look at if you're trying to like actually, and that's also probably another way I could improve that. If there's ways I can, maybe include like a Sharpe ratio or Sortino ratio in there, any sort of like additional feedback, but it's not the easiest thing to do in PineScript, sadly. I mean, there's a reason why their backtesting framework is like separate, and you kind of have to make a different type of indicator for it. But
I saw that you had written this backtest adapter, and it was another novel approach I thought you took. I've not seen anybody write an indicator that outputs an integer that can then be used for a backtest adapter, and I thought that was pretty clever.
Yeah. It's not a lot of people have done it. I wasn't aware. Someone commented on that particular indicator, and they're another well-known developer in the community who actually just got the wizard title, which is really cool. But he had done something similar, but honestly, I haven't seen it done very much. Yeah. But it kind of saves you the headache of having to port an entire indicator that's
into a strategy.
Yeah, into a strategy. It's just so inconvenient. It's a nice little hack that you can do, but it's not totally perfect, but you can only hope it will be easier in the future to backtest it.
For sure. Yeah. So I think one of the other big things that you've been able to do here, though, is you've built a machine learning library that now in some way provides the ability for you to use nearest neighbors and use Lorentzian distance for other types of indicators. So I was hoping to get your sense of the 5 features that you chose and maybe other problem spaces that could be explored with other types of indicators. There are obviously hundreds and hundreds of technical indicators, and many of them have different uses in their own merits. Did you have thoughts on expanding this to other features, or thoughts on other experiments you'd love to try?
Oh yeah, definitely. A lot of thoughts on some of them. It's usually a matter of how possible they are. Again, in PineScript, like some of the experimental features I'm looking at is like use remote fractals. So like it kind of forces you to look back towards the beginning of history. And the type of like scores you get are really fascinating because it just kind of shows you the underlying frequency of the market, how it's literally the same throughout the entire history of an asset. So that kind of gives a useful, feedback. But I'm always running into this problem of just like computational runtime, and a lot of people complain that it times out whenever they change the settings. And I think it might be different actually depending on what your subscription tier is. Like premium, people can run it longer. Yeah, so that's always kind of an issue. But I invented this max bars back metric just for that reason. It kind of limits the amount of bars you're dealing with, because like I don't even know what chart I'm on. Euro USD, yeah, like this one goes back decades, right? Right. So there's like no way you can finish that computation in time. So whereas in Python, no problem, you can just crunch that data. But it's a little trickier in PineScript. But so in terms of like the ability to use these algorithms in other indicators, it might be a little tough. You're going to have to definitely jump through some unnatural hoops like I did in terms of like limiting the amount of data that you're working with. Yeah, I mean, it's definitely feasible. One thing I'm considering using it for, I recently built it. I don't know if you're familiar with Midjourney or not. Yeah. So it's a way for you to go on Discord and actually interact with these really incredible models, stable diffusion models that generate really beautiful pictures from text, right? So I'm kind of doing something similar in my Discord server where you can do the same thing with deep learning models, but generate charts and the predictions of where these charts will be going. So that's one really interesting problem space, because you could actually use features to train these models that are based on other machine learning models, like this Lorentzian classifier. So they call that, when you train together models like that and use output of one model for input to another, they call that ensembling. Yeah. So I'm definitely considering kind of like adding that to the existing bots that I have right now running on Discord. that people have been that they've been using. So that's kind of like one idea that I've had. But yeah, I guess in terms of TradingView indicators, it might be hard, but not saying it's impossible. There's definitely ways to use it.
For sure, and it's certainly something I'm going to give a try. Again, I appreciate you making this open source for the community to play around with.
Oh, yeah,
I have
yeah.
I have several indicators I use for different regime filters, as well as for overbought and oversold conditions. And I think that those are easy to experiment enough with what you have here just by modifying it to my own version. I'm excited to see what you have done in this 1.5 beta. Is that something you plan to release sometime in the future, or?
Yeah. Right now, it's the people who've been helping me are my supporters on Patreon. I try to give them access for supporting me, because it helps a lot in terms of the amount of time I'm able to put in. But yeah, this is something I do want to open source. I'm a very firm believer in open sourcing. I think everything I've done here wouldn't be possible if it weren't for research that people have open sourced and these techniques that people write about. And I try to document everything in my write-ups, like every paper, every person whose work I used. So it's important to me that people can learn from this. So because I think there's a lot of potential for machine learning to actually help traditional technical analysis and algorithmic trading in general. So I want it to be able, I want to be able to contribute something that people can learn from and use. So
I'm currently working towards a chartered market technician designation, and one of the most common pieces of feedback that come from CMT candidates is the idea that technical analysis in general needs a lot more in the realm of quantitative science and machine learning in order for us to really expand the domain. There's a lot that's been done in terms of processing time series data and developing indicators, but what you're developing here, I think, is closer to the domain many of us would like to explore. There's this amazing technology available to us that leverages more of a statistical approach and quantitative approach. And we need to be pushing that envelope. So I think you're thinking the right way. There's a lot we can improve on here.
I could not agree more. Yeah, that was really kind of being new to this space in general. I was honestly pretty surprised by that, just how little, because a lot of fields are pretty far along these days in terms of the standard is working with kernel regression as opposed to moving averages,
right,
for example. And this line that you see, a lot of people think it's a moving average, but it's
a kernel
not.
regression. Yeah,
it's kernel regression. It's incredibly powerful.
I saw that in your video as well. Maybe you can explain how that works.
Yeah, oh, definitely. I mean, I always say it's kind of like moving averages, but on steroids, because you can fit the data in ways that moving averages they can't. And the reality is, even moving averages themselves can be modified as kernels. So like a simple moving average, for example, is just a rectangular kernel, and you're fitting that rectangular kernel to every point along the way. All of the points that you're kind of basing the regression on have the same weighting. So it's not very intelligent. It's just, you can compute it in different ways, but that's using it as a kernel is definitely very valid. Now,
to that point, I think one of the major drawbacks of moving averages is the drop-off effect, where some of the oldest pieces of data might have the biggest weight on the moving average than more recent data does.
Exactly.
Does a regression kernel kind of solve that problem?
Yeah. So, well, at least the kernels that I'm using in this particular implementation, I have a library that kind of takes a lot of really popular kernels and exposes them to developers. So you could actually import it super easily with just a single line, like import from kernels,
right,
and then pick whatever kernel you want. And the rational quadratic kernel in particular is kind of like a really special type of Gaussian kernel. So if you think of a Gaussian distribution as like a bell curve,
sure,
right? So instead of just a rectangle, you're actually fitting it based off of this Gaussian distribution. So it sort of tapers down that effect that you're talking about, where you could have really important things back there that aren't being considered. But when you have this bell curve effect, you can actually grab quite a bit of influencing points that ultimately contribute to how the curve is being changed. And I have a whole section down there.
Is that because it's a normal distribution of the number of observations made in the rolling window?
Yeah, I mean, the reality is it's not a perfect normal distribution. That's a pretty big assumption to be making.
Of course.
But it kind of works for the most part. I mean, certainly better than the exponential kernel, which is the EMA, or
right,
the rectangular kernel, which is the SMA.
Right.
It much better than those, in my opinion. I mean, those serve a purpose, and they're useful tools. Don't get me wrong. But I feel like in terms of the amount of potential you have for being able to fit the data, I mean, there's very few implementations of moving averages that can actually compare, I'd say, especially if I start lowering this regression level down here. You can see that it gives you like a very tight fit, and you can pretty much customize how much you want. The rational quadratic kernel is cool because you can basically customize how much you want the longer timeframes to also weigh in. So if this is longer and you set the relative weighting to 50, you get some pretty cool fits to the data that you wouldn't get otherwise.
Have you released this regression as an indicator itself?
I actually have another one called Nadaria-Watson rational quadratic kernel.
Got it.
This was one of the first indicators I made that started getting a lot of attention because I think people kind of realized the potential of it. But you can see it's just this right here. Nowadays, you don't have to copy and paste this anymore. You can just use my kernel regression library. If I go to like the Lorentzian indicator, for example, and show you the source code, you'll see that.
I saw your library in there, your ML library.
Yeah. So you can see how I'm just importing it down here. This is the kernel functions library, and I've got a lot of really cool ones in here. So there's the Gaussian fit, the rational quadratic kernel, which is a close cousin, but with like a little bit more flexibility. Periodic is very fascinating. It kind of shows you the underlying cycles in a market, and it actually fits those cycles in a way that's better than even the Gaussian kernel can. So it's just a very powerful tool set that I think is weirdly so underutilized in the financial space. So I don't know if you've heard of like the Eurex moving average.
No, I haven't.
JMA. And so that's probably the closest thing to a kernel that I've been able to find, kernel regression.
I don't know what your thoughts are on this one, but in the built-in tools in TradingView, I do use the regression trend quite a bit because it's the closest thing you can get to a distribution of some anchored series of prices. It's on the left-hand side there under the tools. Yeah.
The trend drawing tool.
There's one called regression trend.
Yeah, right. This one here.
So if you plot that across the price series, you'll get a linear regression with 2 standard deviations. Yeah.
This is a useful one. Even this though, I think like there's been a couple of indicators that really I found interesting. It's called repeated median regression, and this is such a useful thing to do in a lot of fields. The research on this is incredible in terms of the different ways you can perform this regression. And this one's actually quite fascinating because it results in a little bit tighter channels that are more well fit. But I think the default that they have, I don't know if it's is that code even available? I don't think they make that available. So
the function that's built into PineScript is linreg, but in theory, you could find the anchored points you want to run in order to create the same output.
Yeah, I haven't taken a look at their implementation, but I've also noticed it's pretty solid in terms of what, the type of trend line it can give in the channel in general that it makes. It's pretty interesting.
It definitely gives a pretty close fit. But I think to your point, I want to take a closer look at some of these tools that you put together in your kernels library. So maybe speaking to that a little bit, since you spent quite a bit of time, not only with a mathematics background, but really I assume you've pushed pretty hard on the limitations of what TradingView's PineScript can do. Have you run into areas where, either a function or your ability to create a new custom function still doesn't solve a mathematical problem you're after?
Yeah, I guess kernels are actually pretty nice in that I haven't hit too many ceilings like that. Because you can actually do a trick with them. With kernels, you typically have like a nested for loop, but in my implementation, you can see that there's really only one for loop going on, and that's because I'm taking advantage of the fact that PineScript also runs in a loop. And I was having this conversation the other day with a few devs in that Telegram group that I'm in, and that's usually the type of hoops they have to jump through as well. Like you have to really cater to the PineScript runtime model, and take advantage of the fact that you're already in a loop. So that kind of cuts back on the amount of iterating that you have to do. So usually it's tricks like this that kind of like make certain things possible, like kernel regression. Because otherwise, if you just try to do like a verbatim port of like Python code, it'll be pretty nasty. And like, you can't even do a whole lot with arrays. It helps to have it in a series data format like this. Because with arrays, you can only plot like 500 objects or something like that. And I'm pretty sure these signals even count as objects too. So you end up like, oh, I actually have one down here. So this is another indicator that involves future pivot points. So it's kind of like projecting where this, where you can kind of think of it as wave trend, but on a longer time scale, where that's like going. So it shows you where the inflection points might be in the future, which can be quite fascinating. And that's also in a beta right now. But you can see how it just stops abruptly here. And that's because I can only plot 500 of those line segments, because they're actually, it looks continuous, but it's actually like 500 different ones all plotted together. And that give it the appearance of being continuous. So ideally, what I would like to do is like mirror this like across itself. But I can't do that because it's a huge limitation, only being able to do 500 objects. So you actually have to spin up two versions of the same indicator to be actually one. And the reason for this is it's very misleading if you're just following the sine wave, because basically the way markets work is you could suddenly have a change in polarity to where an up is actually a down, and it can just go the complete opposite direction. And that happens for a lot of reasons, but the way around that is to just kind of mirror it. So like your eyes don't fixate too much on the up or the down aspect, but more so like, when is it crossing the zero median? When is it crossing its mirror wave? Because these are the times when it usually corresponds to something going on in the price action. So yeah, I guess that's just like one example of the type of workaround you kind of have to do when working in this ecosystem. Yeah.
That's helpful. So you said you've run into a group as well that's looking to explore all that is possible within PineScript. And maybe another thing to explore here is, as far as you're aware, it's clear that PineScript is also compiled into something else. I don't know what TradingView uses in the background. Do you have any sense of what language they're actually compiling into when they transpile your PineScript?
That's interesting. I could probably find out the answer too if I looked back in the history of the Telegram group, because I'm sure they've probably talked to them about it at some point. I've always kind of assumed it must be JavaScript based on some level, because there's a lot of similarities in the syntax. But I know they were talking about the other day how like people just wanted a return statement. I don't know. It just feels weird returning something without writing the word return.
I agree. Yeah, I'm not a fan of that with the functions.
Yeah, and it surprised me because the response from the devs were just like a hard no. Like, this is way harder than you think. It would be incredibly, intense to implement this, and just not a lot of big return on investment. And they have other priorities in terms of just advancing the language. So I thought that was a very fascinating response. But it kind of shows you how, like, where their head is at in terms of trying to, optimize it and get the most value for the amount of man hours they're putting in. But yeah, I'm not really sure, because there's definitely it feels similar sometimes to Python. I mean, like, in terms of like not having to use any brackets and whatnot. But yeah, I feel like sometimes, especially when dealing with array manipulations, it's like the older versions of JavaScript type of thing. So I suspect maybe under the hood they're doing something along those lines, and just like keeping the entire runtime in a loop. But yeah, I think especially in version 5 of PineScript, having the ability to manipulate arrays in the way that you can do, and matrices in general, it's like just enough to be able to scratch the surface of like certain ML algorithms, like the more simple ones.
Yeah. Are you getting any hints from that community that they're going to start offering something more sophisticated for machine learning or even for statistics?
I mean, yeah, I think like really it'll be inevitable in terms of the type of language features they're adding will just enable it by extension. So I suspect we'll see a lot more libraries popping up that will allow for some really cool techniques. But yeah, I guess there will always be that problem of some of these things like transformers. Like, I don't know if you know about like the type of hardware that they run ChatGPT on is like the equivalent of like tens of thousands of NVIDIA GPUs,
right?
Which is insane, like, so obviously there's an upper bound to like the type of computational power that TradingView could, expose to you. But yeah, I think like a more interesting question is whether or not you would be able to run it on your own box, because that would be cool if they somehow allowed for that. But I know there's been a lot of talk about doing that, but I don't know. There's security concerns also related to it. So I don't know when exactly that would materialize, but being able to like utilize your own GPU or something to pump PineScript code, for example, that could be a game changer. But yeah, I think it will be inevitable. A lot of the newer versions of PineScript will probably allow for some pretty cool techniques. It's just a matter of like how computationally intense you can get these things. But I'm excited to see what it brings. I know I've really enjoyed learning the language.
Mm-hmm.
It's been cool to just be able to share ideas so easily on a platform that so many people use for so many different markets. So that's been really rewarding for me.
Well, I appreciate you spending some time doing a deep dive on PineScript there. I think I'm personally fascinated by the language and the community there, and I think there's a lot of opportunity for developers to keep innovating in the space. So I again appreciate you spending the time on this. Maybe on the Lorentzian classification strategy that you sort of put together here, how much testing have you really put into this? Have you tested many different markets? Is there a whole have you done much research on where it performs and where it doesn't?
Yeah, I hear definitely a lot of feedback from people who use it in markets that I definitely don't. I mean, I guess jumping into this, I was really only using it initially for, I guess, cryptocurrency, crypto markets in general, for different exchanges. I tend to like that data because it's 24/7 as well. Like even in my deep learning bots, it's just so nice to have that continuous data stream and not have to do any other like manipulations to it to train up a model. But I mean, it's really not too much of an issue with TradingView. They do a really good job of like exposing all sorts of data sources, exchanges, and other ticker symbols in various markets. And I've definitely had a lot of people who are into Forex. I think the whole reason I was on this chart, because I normally don't really do Forex, I was helping somebody kind of like see how you would use it. Someone on Discord was asking a question about Euro USD pair, and I was helping them kind of like, go through the steps of how you would calibrate this. So from what I've seen, I mean, personally, I've kind of like coded it from the perspective of like the 4-hour and 12-hour timeframes for like Bitcoin. That's kind of like where I was at. But in theory, I mean, the algorithm doesn't care what data you're throwing at it. Like,
sure,
you can give it any data and it'll find neighbors. It's actually interesting sometimes to give it like Bybit has these data sources that are like the amount of longs and shorts that were opened up in a given period of time. And it's kind of cool to give it data sources like this, because it also just goes through the process of finding the neighbors, assigning scores, and giving it colors and rendering it nicely in the viewer for you. So it works pretty nicely across all markets. It's market agnostic, time frame agnostic. So the lower time frames are tricky. I mean, obviously there's more noise the lower you go. That's always going to be a factor. So the amount of filtering, like the burden becomes higher on you to do a lot of thorough backtesting, filtering. Just the post-processing in general is pretty intense. And a lot of people don't necessarily know how to do that, which is why they might see the performance kind of drop off. Initially I kind of realized this as a limitation, and my main intention, like the reason why I built in Confluence, like this kernel regression, was so that people who are at least using it from like a technical analysis standpoint can have a lot of useful tools at their disposal. But I know there is a lot of interest in like automating this, like making automated systems off of the signals.
Right.
And that's always tricky, like, because if you enter in the middle of a candle, you risk an intrabar repaint. If you enter after, you missing out on a big move. It's really tough to have your cake and eat it too, so to speak. So it's.
Do you think that the Lorentzian classification can forecast a fair trend, though? If there's a trend that is establishing and forming, do you think it could be used as a trend following strategy?
Oh yeah. I'd say that's probably one of the biggest promises that it has. I'd say especially if you combine it with kernel regression. I mean, the combination of those two, kind of independent feedback mechanisms in general can potentially augment any trend following strategy. Yeah. So it's pretty exciting in terms of like what it could help you do in that sense.
So I think one of the struggles I've noticed with it so far, I've attempted to set it up on the futures market, and many of our users use futures. I primarily trade the the mini and micro indexes. And those are open effectively 23 hours a day, 5 days a week. And so they have a longer period of time in which price action can be observed. I set it up on a 1 hour, 30-minute time scale. It seemed to do pretty well. The win rate was fairly high, around 60%, and risk reward was somewhere around break even. It was like 1.08, somewhere around there. But of course, lots of this is contingent on the features that I've chosen, and also the look back period. The max bars back feature that you implemented essentially is the training period, right? So the other way to look at it is the longer the training period, the more data it has in order to create better classifications. Is that correct? Okay.
Exactly. Yeah.
So that means that also if I wanted to create a robust backtest, it would be very difficult for it to extend beyond the number of look back bars it currently has. I can't go back further than that max look back window, right?
Yeah, and that's kind of the idea I had behind this remote fractals setting. It's kind of like forcing it to go back beyond that 2,000 bars.
Okay. So explain that a little bit further.
It's still experimental. So basically, it's kind of like in the little description I wrote here, it's like a way for you to get exotic fractals. But what that means is like you're just looking back way at the beginning of the history of the chart, somewhere in there. And you're basically using that as a training mechanism. And a mechanism to establish neighbors. So you're just like completely ignoring the last 2,000 bars and just like using stuff way back in time. So it doesn't usually outperform it, but it gives you interesting like color gradients and like you see that it basically just made this a lot more red. So like it kind of shows you just how much the actual opinions of these historical points matter. But it's sometimes useful for just getting like a different perspective. I'd say I'm still trying to figure out the best implementation of it, but it's useful kind of like as a workaround to what you're describing, because using only 2,000 bars is very limiting, and sadly it's just like a limitation of PineScript. Yeah, I'm playing around with experimental features like that. Sure. People are giving me feedback. Some people really like it. Other people are just like, this doesn't help me. So it's kind of interesting to see the types of opinions that people on Patreon give me. But yeah, it's definitely a work in progress in terms of figuring out how to implement that.
Sure. Maybe one potential solution to the problem is to use the bar replay tool so that we can eliminate all of the current range of bars and try to go further back in time and then observe 2,000 bars before that, right?
That's interesting. Yeah, I mean, I know they've been doing a lot of work on bar replay, and I just don't know. I don't believe there's a way to do that programmatically. That is the thing.
Oh, I don't think you do it programmatically. I'm saying as part of a rigorous backtest, I can test the current 2,000 bars and then bring my cursor back 2,000 before that and test the 2,000 before that. And now I can get a further period of time to test.
Absolutely. Yeah, that's a very valid mechanism. Yeah.
Okay. I'll have to give that a try.
The one thing you have to be aware of, though, is a lot of people say like the signals aren't appearing in a way that they appear in real time. And the reason is like machine learning is data dependent, right? So like when you're in replay mode, you're not getting like every single tick, like a new price. They're giving it to you in like packets, right? So all of a sudden you could see like massive changes in the signals. That's because like so many ticks they're giving you at once. So the model like adjusts itself according to what it has, right? So you receive the data in a slightly different way. And that's kind of like a key thing to keep in perspective when you're going forward. Yeah.
And that's true for real-time bars, which is largely, I think what you're describing there is the repainting problem we run into with many strategies. And partly how we avoid that is to make sure that we are not making any decisions until the bar closes. You made the point earlier that maybe you missed the move, but if it is picking up a high probability of a trend following entry, maybe you're 1 bar behind, and that's still okay if this is forming a realistic trend that you can either add a trailing stop to or wait to get a signal in the reverse direction and it's still profitable.
Yeah, exactly. And that's more or less what I try to tell people. I'm like, there's still actionable information here that you're getting, so like try not to get hung up on the fact that, you just missed this little like bar move. So yeah, what you said it perfectly. I agree.
Okay. That's good to know. Well, I would love to keep experimenting with your indicator. Like I said, I have a couple of other features I think I want to experiment with, so I'll make my own modifications, but let's stay in touch on it. I'd love to pass some ideas back and forth with you. Yeah,
please do. I'd love to hear about what you learn. It's to me, that's the most rewarding part, seeing everyone's feedback. And I didn't know how this would be received, and it's really cool to see the interest. So
it is cool. I think there are a handful of machine learning indicators out there. Some seem, well, I think the fairest thing to say is some are labeled as AI when they're not AI at all. Some
yeah,
seem to use some simple approaches to machine learning, maybe just regression. But what you've done here, I think, is very, very sophisticated, very helpful, and you've introduced a library of helpful tools that can be used elsewhere. So I appreciate your open source contribution there.
yeah.
So what's next? What new ideas are you going to be working on after spending a little time on this?
Yeah, there's been just so much interest in this, and I've been surprised by just the amount of people that have reached out. It's been really cool. And I've tried to make a space where people can kind of share settings and talk. So lately a lot of my time has been going into just building a Discord server, and so far that's going really well, and exposing tools there that I couldn't do in PineScript. So like deep learning models, that's been taking up a lot of my time lately. Just like training these forecast, kind of similar to this one down here that you see, but instead of just like going off of a frequency, it actually uses deep learning and sequential regression to projection to the future. And it's very interesting. Like it's as a source of confluence, it's pretty next level stuff. And I think it's something that a lot of people seem to be enjoying. So there will be that, but I also want to continue, helping PineScript and the community, like see how like kernels, for example, how they can be used. I've been thinking about maybe even making like a video series on YouTube, just like breaking down the benefits of kernels and just trying to like help people realize it. Cause I'd like to see it become more popular. That's why I'm making these libraries. Cause I feel like there's a lot of potential that's being, missed out on. A lot of other fields have started doing it, and I think there might be a little bit of a lag for whatever reason in the, at least in the kind of retail side of the finance sector. So,
well, you've got to subscribe from me. I look forward to a video on kernels and anything else that you're willing to update there, and even the future pivots indicator. If that's something you're going to be releasing soon, I'd love to see that.
Yeah.
So how can people get in touch with you? I know you have a Patreon, and is there any other way? Maybe you could offer your Discord URL to me by email. I'll make sure to put that in the show notes. But
yeah.
How else would you like people to get in touch with you?
Yeah, I mean, those are all pretty good ways. I mean, I tried. It's hard. I'm still trying to, because I'm just one person for the most part. I mean, I have some people who have volunteered to help me on Discord, which has been incredible. Yeah. I wouldn't be able to do it otherwise, because I think there's like 300 people on there now. So I try to like prioritize people on Patreon who are, supporting me and allowing me to do more time in these projects. So I always reply to those messages first, but I mean, other than that, I try to distribute it out equally. I will say it's really tough to keep up with messages on TradingView itself. I'm way behind on those. But I think like you guys reached out on LinkedIn. That's always a pretty good way. But I have a Twitter account that I honestly would like to tweet more, but it's just trying to find the time in the day, because I'm just one person for the most part in all of this, and trying to balance.
Time consuming.
Yeah. So it's all really exciting to see the interest, and I wish I had more time to kind of reply to a lot of people. But I'd say the nice thing about Discord is usually if I can't get to your question, there's like someone there who can, and a lot of people understand certain nuances better than I do in terms of like what the settings need to be, how they need to be tweaked on lower time frames, things like that. So that's kind of why I've like prioritized that these past few weeks. And so far it's been a really cool experience. Like I feel like the community we're building there is pretty solid. But yeah, in general, I'll try to get to messages. But yeah, LinkedIn, not Twitter, but Discord is also usually pretty good.
Okay, that sounds good. Well, thanks again for spending some time with me on this and having a presentation prepared. I'm glad we could look at this visually, because I think what you've done is in a lot of ways complex. Maybe one last question about your localhost environment there that you were using to visualize the Lorentzian distance. What is this program here?
So this is actually a custom program. I'm calling it the distance algorithm visualizer, right?
Okay.
So I've gone through and I've selected like some really interesting ones from the literature that perform really highly on benchmarks in terms of like beating Euclidean distance in certain areas. Lorentzian's a rare one in that it kind of like beats Euclidean distance pretty amazingly, like consistently across like all different types of tests. But this is basically a JavaScript environment using a library called 3JS. So for rendering 3D. visuals, and it's like perfect for this type of thing.
Yeah.
Obviously, you can't visualize more than 3 dimensions, but it's great to go from like the jump from like 2D to 3D, because that's always one thing that's kind of tough in PineScript as well. Yeah.
Is this a project that you've open sourced on GitHub, or is something you intend to at some point?
Actually, it's a good point. I think that would be a cool thing to open source on GitHub. Honestly, I made this out of necessity. Like
Sure.
in order to wrap my head around some of the things I was reading in the literature and like understanding why this actually works, it's just really helpful to be able to have this third dimension and kind of like navigate around in it, see it from the perspective of like, this is the current day, like looking around and seeing like all of your historical neighbors. You can like start thinking about the problem in a different way.
Yeah.
So that's why I kind of prioritized the development of this. But yeah, I haven't open sourced it yet, but I think it probably would be a pretty cool thing to open source. And I'm not sure.
Yeah, maybe even just for its applications in this indicator, if I decide to build something that uses entirely different features, entirely different indicators, it'd be nice to visualize those in a similar way to understand the exact relationship you're showing here.
Definitely. Yeah. I completely agree. And I try to do a lot in order to make my code like shareable. Right now, this is still very raw because I'm only only user.
Yeah.
But I like to think I have high standards for sharing code, but I think like what you're saying is definitely true. Like I think there's a lot of value in that. So I'll see what I can do in terms of like putting that on the backlog.
I appreciate it. I don't want to put too much pressure on it. It sounds like you have enough on your plate.
Yeah.
Well, cool. Well, thanks again for taking the time. Looking forward to seeing more work from you, and I'll make sure that our community has all the resources they need to get in touch, and also to give your strategy a try here. I think plenty of our community would love to look for new ways to generate great trading strategies, especially from an automated perspective, and that's largely what we do here at Traders Post, is provide the ability to tap into indicator alerts or into strategies in order to automate those strategies. And so if something like this can facilitate developing a stronger signal, that's the aim. So appreciate your contribution.
Yeah, my pleasure.
All right. Thanks again.